So, listen, the market is up nicely, but opinions obviously are still mixed, and here's why, right? Some market participants and folks who, let's be quite honest, have a deep dislike for the White House point to that Wall Street Journal article that came out last night suggesting that President Trump wanted to walk away from the Strait of Hormuz and just simply declare victory. Now, of course, the problem with that scenario is that aside from Iran's nuclear weapons ambition, the spike in oil prices has made this the economic event that it's become, right? The thing that casts this dark cloud that could eventually trigger a global recession. It would be naive to think an emboldened regime would play nicely and not charge $2 million transfer fees and maybe try to do deals in the yuan instead of the dollar. Now, I understand why President Trump is angry at those who are benefiting from America's military might, our expense, the sacrifice of our treasured troops, and not send their own forces. I get that. It's Spain, Italy, UK, all of them, right? France, just extremely ungrateful. But they're also unwise when it comes to this, right? The weakness that they're showing right now is not going to save them, particularly if the United States walks away. Everyone sees this weakness, and they will seize upon it. And it's not ironic, really, to be quite frank, that the Gulf states, the countries that are closest to Iran, they're imploring the administration, please finish the job. And it might get done sooner rather than later. As you can see in today's session, crude oil, which hit 104, almost 105 West Texas Intermediate, that's reversed lower. Stocks, which came out the gate okay, have gotten a second win. All of this on report that Iran, that their president is open to ending the war. Now, what's crazy about this is I talked about this on this show yesterday, right? And by the way, it was based on a report from Israeli news over the weekend. Now, those who President Trump were referring to, by the way, in the post when he talked about dealing with a potential new regime, that's what we're talking about right here. In fact, it's kind of believed right now that the IRGC, not only maybe internally there's some issues, but also are maybe could take control of the nation from the mullahs. We're talking about a new, better regime. I have one of the best foreign policy guests you could possibly have, Lisa Daftari, who, by the way, is Iranian-American. She's on later on to discuss this, but she knows this stuff inside and out. Another thing that's helped this market that's not getting enough potential ink in my mind, the Powell pivot, right? I really do believe the financial media is underplaying yesterday's Powell pivot. It was casual. It was at Harvard. It wasn't a speech, but it did send bond yields lower, and it shifted the odds of, at least in the Wall Street modeling, for rates to be cut rather than hikes. And then there's good old-fashioned fundamentals, folks, which have been totally ignored, right? Major indices under serious pressure, but earnings, so we're under all this pressure. Well, which way do you think earnings are going? These are earnings estimates. They're going absolutely through the roof, especially for large cap names. Now, despite earnings rising, only 41% of stocks right now in the index are trading above their 200-day moving average. It's up a little bit today. Market purists, though, actually want to see this market get hit a little bit more, right? They love to see this number go even lower because keep in mind, remember the tariff tantrum? Only 17% of names at that point were changing hands above their 200-day moving average. I hope this is the bottom. Okay, but if we go lower, it's going to be climactic, right? In the meantime, the broad market today, we see growth momentum coming on strong. Those are the categories that usually lead big-time rallies. By the way, speaking of growth, the growth sectors are finally in the charge, in the lead when it comes to the S&P 500, right? You got communications, information technology, and consumer discretionary. Now, the big news also this morning, helping all of this, NVIDIA cutting another big-time deal, this time with Marvell. And there's still, though, this curious cautionary R when it comes to technology stocks. And what's really amazing about it is I think there's a serious underappreciation for the damage that have been done to these stocks, these biggest stocks in the market. They've taken serious haircuts. So to understand this table, the Mag 7 and Oracle are 85% of the decline of the market this year. 85% of it just comes from those 8 names. Now, this morning, consumer confidence came out also. Guess what? Better than expected. Improvement in all areas. Of course, this is the one here that the headlines will focus on. That's inflation. As one might expect, inflation expectations have indeed climbed. So it's a great day so far. But the real test begins with how this market finishes, right? And that's not how we begin. It's not the middle. It's always how this finishes. Now, ultimately, this is going to play a big role. Short interest, look at this, through the roof. They're betting that this market goes lower. When the time is right, there will be a monster short squeeze. Ultimately, what I want to see to get even more aggressive, though, I want to see that S&P 500. I want to see that get back above its 200-day moving average. Maybe even have a golden cross. In the meantime, let's bring in my first guest.